is really entertaining how they pulled that off. But let's listen to that Bessent clip here, because this is the Bessent clip, apparently, where he gets pissed about Powell. And I'm pissed too.
Said that he also said the stock market was high. I don't know why he said that and why he would wade into that territory. But what is your thought about the macro story right now? I want to get your take on where we are with regard to economic growth and what's ahead.
Clearly, the Federal Reserve has been too high for too long, and we're going into an easing cycle here. And I'm not sure why Chair Powell has backed up a bit here, because as we can see, we inherited a mess, and it's unclear now. We've had almost 2 million downward revisions in the jobs number. There was almost no private job creation in the Biden administration, and with these revisions, we know that something was wrong beneath the hood, and now we could see, in terms of the housing market that affects consumers, working Americans, rates are too restrictive. They need to come down. And I think we will go into a cycle. And I'm a bit surprised that the chair hasn't signaled.
Wait. I think we will go into a cycle. Also, shout out to Crypto Lifer in the chat. Just donated $100. Dude, thank you. Y'all are just nice people. Thank you for that. I mean, this is interesting. Bessent saying, hey, I think we're going into cycle. It's something I talked about to course members this morning. One of the things I talked about is don't go short-term calls right now. There's too much uncertainty between now and at least the middle of October. Why? Because government shutdown Monday. And the Democrats are probably going to lead to a shutdown, which is fine. I get it. This is their version of negotiating, and it's what Republicans would do as well if the rules were reversed. It happens all the frickin' time. On its own, a government shutdown doesn't frickin' matter. But that comes at the same time as, the government shutdown technically would be scheduled for Wednesday because it would be October 1st. You have ADP coming out on Wednesday as well, the jobs report, which is actually expecting decent numbers right now, somewhere around 54,000, which would be great because, we had a I think it's 52,000 is the estimate now and 54,000 was the prior, which is great for ADP. Then you've got the jobs report on Friday. This is a really intense week of catalysts. And usually what the market does is we'll look at really bad job numbers, like 22,000 for August, and we'll be like, oh my gosh, these numbers are absolutely terrible. And let's keep going up in stocks. And then the markets just sort of buy the dip, whatever dip there is. I mean, the S&P 500 has not had a minus 2% day for 107 days in a row. That's rare. That's, clearly a very bullish cycle. So, you've got to get through this poopy doopy here. But the point is, the market has had this tendency of taking these bad job numbers and then just going, whatever, bro. It ain't that big of a deal. And so what ends up happening is you have this bad job number read, market panics for a moment, and then goes back up. That's what happened with the August job numbers. Then we get these massive 900,000 negative revisions, which Bessent is saying over a year is about 2 million, which is correct. And then market's like, whatever, doesn't matter. Well, it all just, quote unquote, doesn't matter until it does matter. But in the short term, that's the way the market is playing this. You get frantic about the data going into it. The data comes out, people have a heart attack, and then people just go back to partying because, you get great earnings at Alibaba, who's increasing their capex. Micron, who's increasing their capex. We did a great analysis on Micron this morning, by the way, going through their 10K, 10Q, and earnings call. And we broke that all down in the Meet Kevin app for course members, which is great because now you can literally search by ticker symbol and see my latest analysis if you're part of the Meet Kevin membership, which is kind of like a cool new feature we added. We just basically just added that. But Bessent is right that why is Powell walking back on this 3 rate cut SEP and not really highlighting that we need rate cuts when we are going into a quote-unquote cycle of painful employment numbers. Remember, all you have to do is look at the 27 weeks unemployed number to see that this is not like the mid-90s. People keep referring to the mid-90s, and the mid-90s didn't have this trend in 27 weeks unemployed. Now, maybe this time is different, but look at 27 weeks unemployed. You barely had a move here in 1995. The downtrend was very, very clear. Any 5-year-old could tell you that the trend in the 90s on long-term unemployed was down. What do you have right now? Up. What do you have every single time you have a recession in 27 weeks unemployed? Trend up, skyrocket. 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 You get the idea. Okay? So, like, as much as I think politicians are all scum shills for their parties, I will always, first of all, try to piss you off because I don't want anybody to like me. And second of all, I want you to know that I'm going to call these people out all the time. But damn it, this time Bessent's right. What the hell, Powell?
That we have a destination before the end of the year of at least 100 to 150 basis points. And I will add, President Trump's pick for the Federal Reserve Board, Stephen Myron, Stephen has said more in a week than the Biden administration appointees have said during their entire tenure.
Yeah.
In fairness, he's also kind of right about this. Myron loves this economic data. I am blown away with how analytical this knucklehead is. This guy is majorly analytical. I mean, he's talking about the elasticity of
he
tariffs.
wanted a 50 basis point cut.
And I actually think it's brilliant. I mean, just to give you a really quick primer on that, Myron basically says, hey guys, here's the thing. The company or the country that benefits from tariffs is usually the one that has more demand elasticity, where you have choice. Like, for example, if you need a life-saving medicine, or maybe not life-saving, maybe it's like the only thing that works for your skin is Dupixent, let's say. Nothing else works. You're very inelastic. You have no other choices, so you must buy that medicine. So as price changes, your quantity demanded stays the same. That's very inelastic. So you're like a stiff rubber band, and you're like, oh, I don't care what the price is, man, I just need it. Whereas, like, when we're buying stuff from China, a lot of it, yeah, we can get in other places. He's the first person from the Fed to make that argument, that as a result, manufacturers are more likely to pick up the impact of tariffs. Now, I don't know that I 100% agree, but it's a clever argument that nobody's made before, and I actually support that sort of communicativeness. So, like, trust me, my first impression was Myron was going to be the biggest Trump shill ever. He's still a shill, but he's impressed me. I got to give him credit here.
Jay Powell cut 25 basis points. Stephen Myron wanted 50.
Well, these meetings are supposed to be a discussion. You're supposed to go into them with an open mind. And, I think not unlike the UN, we've seen a lot of mistakes, a lot of rigidities. And, it's good to get some new blood in there.
Who would be your best pick for chairman of the Fed at this point?
Maria, I'm interviewing 11 candidates. We've got a couple who have surprised me in the strength of their candidacy during the interviews.
Okay.
And
who surprised you?
I'm sorry. I'm not going to talk specifics.
So you don't want to break that news right now?
Maria, if I could, I would, because you're my favorite. But
of course, she's the favorite because it's Fox News, and remember, there's a revolving door of people who work in the Trump administration, who then go work for Fox, or people who work at Fox and then who go to Trump. And this is why Trump wants the Murdochs to be involved in the TikTok investment, so they could tune the algorithm to Trump. That is dangerous, mind you. That is not good for free speech. It is the same thing that, yes, the Dems did in 22. I'm saying it's both bad.
I'm going to be interviewing more candidates this week. We respected the Fed's quiet period, and we didn't interview any sitting Federal Reserve board members or presidents. So there's going to be a lot of interviews next week. I think the first round will be done for first week of October. Then we'll start another round, and I look forward to being able to discuss it with President Trump present him with 3 or 4 very strong candidates.
Do you think, given what we've seen in the labor market for the last 3 months, we've seen this weakening in the last 3 months. I don't know if you believe the numbers or not at this point, but do you think that tiptoes into recession at some point?
I am less concerned about a recession. I'm concerned about the distributional aspects that we've got going here. I'm concerned that working Americans are getting hit harder just because of the high rates. I'm concerned that a lot of the housing affordability crisis is on the mortgage side. So, I am very concerned, and I believe that we do need rate relief. We need to get at least back to neutral.
Isn't it odd that when you talk about lower rates...
He's basically saying, like, hey, it's uneven, right? Like, you've got this big AI boom that's preventing a recession, essentially. But you're hurting so many Americans because these higher rates are, crushing, as we always say, like the bottom 50%.
It said the Fed expected to cut another time, at least once more, that rates go up. Do you think it's a certainty that as the Fed lowers rates that you're actually going to see a real impact on, for example, mortgage rates?
I do believe that we are seeing we'll see a substantial drop in inflation. I think that the housing numbers are done through imputed rent, that we're going to see, they run on about a 6-month lag. Everything that President Trump is doing in terms of deregulation, which I think is the third leg of his economic policies, that's all disinflationary, and we'll see what happens with this AI boom. Back when the railroads came in, we had this wonderful inflationary growth. At the end of the century, we had the same thing in the 1990s, and everyone asked me, what am I looking for when I interview potential Federal Reserve chairs? And it's just someone with an open mind. Someone with an open mind who's not looking in the rearview mirror, who's looking forward, who thinks maybe this could be like the 90s, where we saw the office electronics came in, we saw the internet boom. So could the AI boom be like that? Could we have a disinflationary period? Is R star, if it exists, going to move up or down? What's Nehru? So I want somebody who's looking forward, not backward.
It's such an interesting scenario to look at AI, because on the one hand, that AI is going to replace some jobs, right? Obviously. But on the other hand, we didn't know we needed coders 20 years ago. We didn't know we needed all these engineers. So other jobs, even in energy, will be created. But do you have a plan for those jobs that will go away as a result of artificial intelligence?
Maria, we don't. We're working on it now. We actually have what I call an AI czar at Treasury, and she is developing a plan, a roadmap that can help us with the U.S. economy. I'll be talking about that in speeches this fall. And we don't know which way it's going to go. And again, I think we got to have an open mind. But one of the things, as you know better than anyone, President Trump's trying to bring back precision manufacturing jobs to the U.S., this blue collar boom that we're going to see. And those jobs aren't going to be taken by AI.
Yeah, I love what President Trump is doing with the supply chains. It is so important. And I understand this is national security. We're all wondering if there's sort of an outlier out there that is going to turn things around. And I want to get your take on Argentina, because, Mr. Secretary, Argentina's peso sliding.
Yeah, all right, so we'll talk about Argentina separately, but think about what he's basically saying here is like, hey, we don't have a plan for how to basically help that lower income American or the person who's going to lose their job to AI. The only plan is cut rates. That's the plan. The plan is pressure the Fed to cut rates because there's nothing we can do. That's kind of also a little bit scary, right? Because now we look and we say, okay, great. So our government isn't going to invest in trade schools. They're not going to invest in better education. They're going to cross their fingers and go, well, hopefully we don't go into a recession, but we don't know what to do about all the people that are going to lose their jobs. It hopefully will be like the mid-90s where, people had a, people were able to find new jobs and we didn't end up going into recession. We got a soft landing. But understand, that's the mission of the Trump administration is hope that the policies that they've instituted, such as the big beautiful bill and tariffs, and these and some form of deregulation, those three things combined lead to hopefully lower debt for the United States. I wouldn't bet on that at all. They'll spend that all away right away. It's like, yay, we're collecting $300 to $400 billion in tariffs. Cool, but we also just spent $3 trillion on the big beautiful bill. So, well, there goes nearly 10 years of that tariff revenue. So I don't expect the debt to get paid down, but instead be hopeful that tax benefits, infrastructure spending lead to hiring. We need a resumption of hiring. This is what a lot of people say, is that there will be a tailwind in the business cycle, because companies will go from, wow, things are so uncertain right now because of all these like tariffs and then taco and tariffs and taco, that people were really like, oh, let's just wait, let's not hire. And there's this hope, and that's all it is a hope, not the best strategy, but there's this hope that businesses will say, all right, we get it, we know what the tariffs are now, we're going to start investing in hiring again. Okay, that'd be great. Businesses can start doing that, start creating new jobs. Fantastic. We soft land, we're good. 27-week unemployed levels can start coming down. And Bessent sees the only way forward as a Powell who's going to be supportive of rates coming down to enable maybe small businesses even to create those jobs. And think about it, small businesses, they would be the biggest recipients of lower interest rates, and they would be able to hire more. So I could see why this is their only strategy. It's like it's almost like what Powell said. Yeah, the only tool on our tool belt right now is really rates. Okay, so why not more guidance on what you're going to do? You went from a SEP that said 3 cuts to not mentioning the next periods of cuts at all, which led the market to go bearish, after the Powell meeting, which is what I said in the Alpha report to course members. I'm like, look, you need a dovish Powell to go green. Or to stay green or go more green. And we didn't get a dovish Powell. We got a neutral Powell. It's just the worst. It's the worst evolution of Powell. The neutral Powell. We don't want neutral. We want bullish. So I get it. I get where Bessent is coming from. And that's why Jamie Dimon says, hope that they pick a good Fed chair for next year. Honestly, I wouldn't be surprised if they pick somebody like Myron. Myron potentially has more sway. I feel like he's a very convincing debater. You look at somebody like Waller, a little more old school, a little more like, I feel like he's a little more like Texas, like, well, we ought to cut rates 150 basis points to get back to neutral. Oh, okay, well, why do you think that? Well, the disinflationary process is continuing. And that would sort of be like his argumentation. Whereas, you'll get somebody like Myron who will just even Sarah Eisen shuts down when Myron's talking because he's throwing so much economic data in theory. And it's great because at least he has something that he stands behind. But when Sarah Eisen glazes away, we're like, oh man, this is too much. We're not talking about the elasticity of demand. Whew. I don't think I can unsee that face that she had. That's how you've got somebody who's so convinced in their data. They're nerding out over this data. He could end up being a better chair pick. And technically, he could get picked for the chair. It might be Myron. I feel like this is a dress rehearsal. And if you get Myron, man, he's going to push for rate cuts. It'd actually be the most bullish scenario. You don't want Hassett, who's a wet blanket. You don't want Kevin Warsh, who is an anti-QE when you need it person. Waller is good, but Myron might be great. My take.
Knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.